Hi, welcome to this webinar organized conjointly by FERMA and Willis Towers Watson on cyber reporting stack, navigating the EU requirements. So my name is Philippe Cotelle. I am board member of FERMA, chair of the digital committee, and I have the pleasure to do this webinar together with Laure Zicry, head of FINEX Cyber Western Europe for Willis Towers Watson. You can have access to this report through the FERMA website. So there is here the QR code, and this report is available directly on the FERMA website. So the purpose of this webinar is really to go through the main purpose and scope of this report and allow you to really have a grasp of the main intention of the work that has been done conjointly by both FERMA and Willis Towers Watson. I suggest that, of course, you can ask a number of questions. We will probably take the question at the end of this first presentation, making sure that you have an overview of the global picture of this report. On cyber, really, one thing which is very clear is that FERMA has been working on cyber for a very, very long time. We started to work both on the governance side, which was for us the key element to start with. And there is a specific report available on the FERMA website. We then worked on the second element, which was the cyber insurance market and how to develop the cyber insurance market globally for European entities. And today we are addressing the regulation aspect related to cyber. Cyber, as you can see, is still a major threat for all the organizations across Europe. And what we can say is that artificial intelligence is coming into play, which means that cyber issue and data risk issue will stay on board as a major element to address in the coming years. Related to cyber, there were two kinds of changes. The first was probably a lack of transparency about the entities that suffered a cyber attack, and also a threat of systemic issues. And therefore, the regulator did take some actions in order to address those two major challenges. The main target was to push for better transparency, more protection for the users, the critical organization, the financial institution, the products. And therefore, to do that, they have introduced a number of mandatory requirements for reporting with tight timeline and penalties in order to secure that there would be a prompt actions from the entities in order to do that. However, what is very clear is that Europe is currently challenged both externally and also in its model itself is under scrutiny. There is a strong demand for better efficiency in order to help prosperity and growth. As we will see, a number of regulations that have appeared on cyber reporting at European level or even at national level have come into play. And their requirements are maybe not always fully coordinated, and driving through this landscape is very complex. We will try through this webinar and thanks to this report to help you to clarify the key principles and maybe also later draw some recommendations on how we can improve that. And therefore, to do that, maybe Laure, can you help us in getting a better view about the different regulations and landscape at the moment? Laure, floor.
Sure, thank you. So over the past 10 years, there has been a dramatic acceleration in the number of EU policy initiatives that concern the digital economy and cybersecurity. From rules governing the use of personal data with the GDPR to the broader perspective of the resilience of critical entities with NIS2 and DORA, and on project design with the Cyber Resilience Act, the CRA, the gamut of digital and cyber policy is vast. As Philippe said, the rationale behind these regulations are partly due to a long-held belief in the EU that there is an insufficient common understanding of the main threats and challenges that surround EU member states. So the various pieces of legislation contain different responsibilities and mechanisms for the reporting of incidents. The white paper written by FERMA and WTW aims to describe the stack of notification requirements related to these regulations. So let's start first by a brief description of each regulation and the according notification requirements. So we will start with the GDPR, which is a privacy and security regulation aimed at protecting the rights of individuals, the European citizens, regarding the processing of their data. The GDPR is in effect since 2018. It requires the data controller to notify the relevant data protection authority of a data breach without undue delay and where feasible, no later than 72 hours after it becomes aware of the breach. And when the personal data breach is likely to result in a high risk to the rights and freedoms of natural persons, the data controller should also communicate the personal data breach to the data subject without undue delay. Let's move now to the NIS2, which one of the aim is to introduce risk management measures and reporting requirements to entities. I have inquired that only 13 out of the 27 member states have already transposed NIS2 into national law. It is Austria, Belgium, Croatia, Czechia, Denmark, Germany, Greece, Italy, Latvia, Lithuania, Romania, Slovakia, and Poland. What are the sectors and entities that need to comply with NIS2? So the directive applies mainly to medium-sized and large public or private entity operating in sectors as defined as sectors of high criticality in Annex 1 or other critical sector in Annex 2, which provide their services or carry out their activities within the Union. But what are the notification requirements under NIS2? Notification is mandatory in case of an incident that has a significant impact on the provision of the services performed by companies that need to comply with NIS2. And where appropriate, entities concerned should also notify the recipients of their services of significant incidents that are likely to adversely affect the provision of their services. With regard to timeline, deadline, and content, this is one of the new features introduced by NIS2. The timeline is based on 3 phases. The first phase is in a form of an early warning, reporting without undue delay and in any event within 24 hours of becoming aware of a significant incident. Phase 2, in form of a significant incident notification without undue delay and in any event within 72 hours. And phase 3, in form of a final report, no later than 1 month after the submission of the significant incident notification. Let's talk now about the Digital Operational Resilience Act. It is a regulation, DORA, which applies to the financial sector. So this regulation aims at strengthening the resilience of financial services entities in face of operational disruption from cyber incidents. DORA creates a regulatory framework for digital operational resilience, enabling financial entities to ensure that they can withstand, respond to, and recover from any serious operational disruption related to ICT, information communication technology. DORA constitutes lex specialis with regard to NIS2 for the financial sector. So for companies affected by DORA, this text, DORA, takes precedence over NIS2. However, this does not mean that NIS2 obligations are completely cancelled for those entities that need to comply to DORA. DORA complements rather than overrides NIS2 and addresses possible overlaps with the lex specialis exemption. DORA is in effect since 2025, January the 17th, and companies need to notify major ICT-related incidents to the relevant competent authority. Last but not least, let's talk now about the Cyber Resilience Act, the CRA, that aims is to safeguard consumers and businesses using products or software with digital elements, with mandatory cybersecurity requirements on manufacturers and retailers. CRA was adopted in November 2024 with the publication in the official journal of the EU. It entered into force in December 2024, so 20 days after, but will be applicable later. And for the notification requirements, which is the aim of our webinar, it will be on September 11, 2026.
Also, as you can see, I mean, and many thanks, Laure, for this description. There is quite a complexity in terms of number of combined regulations that you have at a European level, notwithstanding the fact that there is probably, in addition, some additional requirement at national level. But probably what would be good, and that's probably what we will see in the next slides, is what in practice, how it works. And so can you go through a kind of a use case so that we can better understand concretely how it works?
I will, Philippe, but I have another slide before.
Yes.
So if we can move to the next slide, please. Thank you. So we've just seen with the previous slide that for the 4 regulation, it requires company to be very agile when facing a cyber incident. Mandatory reporting duties is a challenge for any company that will need to react very quickly and with a streamlined process to ensure that all regulations requirements have been met. According to an annual directors and officers survey conducted by WTW in 2024, regulatory breaches and the threat of fines and penalties are considered a significant risk for their organization business operation, either financially or reputationally or both. So for the same cyber incident affecting a company, it must, in order to be compliant, notify various supervisory authorities within very short but different deadlines. And further, there are constraints on the content and on the form of this cyber incident reporting and the potential pain points of being subject to not one, but as many sanctions as there is legislation. So year after year, legislation after legislation, even though every piece of the legislative puzzle makes sense in building cyber resilience as well as protecting data of European citizens, today we really see a stack of cyber reporting duties that companies need to comply with in case of a cyber incident. So let's move now to the case study.
Is the fact that it's also affecting the victims. So you are suffering, first of all, a cyber attack. So you are a victim, but by the same way, during this crisis phase where you were really under high pressure, there is a number of additional requirements that you need to fulfill. And with the threat of having to suffer additional financial penalties on top of the impact of the attack itself. So that's why it's important to identify all that together.
So let's move now to the case study on the next slide. So we are going to go through a case study to understand when reporting requirements apply and how to handle them. So under our case study, we have chosen a 3 billion turnover company that is headquartered in the EU, so here in France, with a subsidiary in Luxembourg and performing services in the health industry, like hospitals or clinics. And that company suffers a ransomware attack. So first, we need to understand if this company fall under some regulations. So regarding NIS2, it is a company in the health industry, and the health industry is within the Annex 1 that I've mentioned in the previous slide, in the sector of high criticality. And with regard to the GDPR, as we all know now, GDPR applies to all companies, either public or private, worldwide, that process personal data of EU citizens. So let's move to the next slide. So I'm going to describe the attack, so the ransomware attack and the data breach. It is a two-stage attack that I am going to describe now. And after we will see how to qualify the incident, to highlight the reporting requirement to both supervisory authorities and individuals, and indicate the possible penalties for failing to comply with this regulation. So an employee of that medical group received an email and unfortunately click on the attachment. When clicking on the attachment, it allows some criminals, hackers, to gain access to the IT system. So what we say in cyber, an unauthorized access to the IT system. So while having access to the IT system, they stole the data and they encrypt then the data, while with the virus that spread into the whole IT system of the company. The virus, as it spread into the whole IT system, the company was no longer able to perform any services for their clients. Can you please click on the thank you? And then the virus also helped the hacker to encrypt all the patient data, and in our case, 20 million patient data. So this is a ransomware attack. So finally, the employee discovered in his screen that there was a ransom demand. Can you please click? Thank you. A ransom demand, a first ransom demand of 85.2 Bitcoin. And that ransom demand has to be paid within 48 hours. Let's move to the next slide. You can click. Thank you. So what internally at the medical group they did? So the CISO tried to access and to restore the data from the backup. But unfortunately, they discovered that the backups are also encrypted. He thought about negotiating with the hacker in order to decrease the amount of the ransom, while he was also attempting to ask a data recovery specialist in order to try to decrypt the data that were encrypted. Unfortunately, this took time and the first countdown expired. And the hacker sent a new ransom demand. And why they send this new ransom demand? It's because, as I said, they have stolen the data. And usually what they say is they threaten the company to disclose this data breach to National Data Protection Authority and to anyone publicly. So usually, unfortunately, when a company is hit by a ransomware attack and a data breach, it is made public very quickly. So on our case, the National Data Protection Authority called the data protection officer at the group And finally, recognize that they have not, unfortunately, notified both the supervisory authority and the data subject, and they finally decided to send a notification letter. If you can click, please, notification letters to the data subject as well. So let's move to the next slide. So here we are going, now that I have described the scenario, we are going to qualify the incident in respect of NIS2 and GDPR. We are going to describe what are the notification deadlines, what are the supervisory authority to report to, in case there are individuals to notify as well, what are the potential sanctions related to the non-compliance of these two regulations, and the benefit of having a cyber insurance in place. So let's move to the next slide. So in terms of the qualification of the incident, so remember that under NIS2, the incident has to be an incident that has a significant impact on the provision of the services performed by the company. So there is a strict definition into NIS2. An incident should be considered to be significant if it has caused or is capable of causing severe operational disruption to the services or financial loss for the entities concerned. Here, as I mentioned, the servers, the computers of the group, all the IT systems were completely down, and the company was not able to perform services to their patients. So it is an incident that has a significant impact on the provision of the services performed. For, with regard to the GDPR, it is unfortunately also personal data breach. The hacker has stolen the data, so it is unauthorized access to the system and disclosure of personal data breach. So it is a breach of security leading to the accidental or unlawful destruction, loss, alteration, unauthorized disclosure of or access to personal data transmitted, stored, or otherwise processed. So we are qualifying the incident under NIS2 and the GDPR. Let's move to the next slide. In terms of deadline, I will go very quickly. I have already mentioned this deadline. Under NIS2, a three-phase process. First one, initial report. Second one, a detailed report, and then a final report after 1 month. With regard to the GDPR, without undue delay and no later than 72 hours, but to which the company needs to report to. Let's move to the next slide. So the company needs to report to supervisory authorities, and here you can see it is absolutely not the same when we look at NIS2 and when we look at GDPR. So for NIS2, it's the National Competent Authority or the National CSIRT, Computer System Incident Response Team, while for the GDPR, it is classic, the Data Protection Authority. So let's move to the next slide. The company needs also to notify individuals. So the language under NIS2 is the recipients. So entities should notify without undue delay the recipients of their services of significant incidents that are likely to adversely affect the provision of those services. And for the GDPR, they have to notify the data subject without undue delay when there is a risk of privacy. Let's move to the next slide. Thank you. Let's talk about now about the potential sanction. So under NIS2, there are three kinds of sanction: non-monetary remedies, administrative fines, and criminal sanction. Criminal sanction are the ones for, unfortunately, C-level management, so for the directors and officers. For the administrative fines, you can see there it can go up to 10 million or at least 2% of worldwide turnover, whichever amount is higher. So it's really now with the NIS2, same kind of sanction that it was for the GDPR when it came into force. for the GDPR is administrative fines up to 10 million, or in case of an undertaking, up to 2% of the total worldwide annual turnover of the preceding financial year, whichever is the higher. So this is the potential breach. I have seen recently, last week, a survey made by a company that said that since the GDPR entered in force, only compared to all the notification made to all data protection authority in the EU, only 1.3% were finally levied under failing to comply with GDPR. So it's really a very small amount. Let's move to the next slide. Thank you. And in case that group will benefit from a cyber insurance policy or program, there are three big pillars in a cyber insurance policy. First, a crisis management cost pillar, in which we have a lot of costs that can be reimbursed by insurers, like IT forensic cost. So it's an IT security company that help the medical group to understand who was, let's say, patient number 0, how they enter into the system, what kind of data has been stolen. Then we have notification cost to data subject and to data protection authority. We can have also notification cost reimbursed, the one that is made under NIS2, so notification to national CSIRT. A call center, in our case study, there were 20 million patient data. So in case they would like to speak to the DPO and have more details about the incident. We have the identity monitoring cost, the public relation cost in order to define a communication strategy to speak externally about the cyber incident. Legal cost. Usually companies need to have a lawyer or advisor in order to fully understand who are the regulations that need to be respect and any other requirements. And then we can have mitigation cost or data restoration cost. On the first party coverages, here we are speaking about the business interruption or the increased cost of work. And in case the group paid the ransom, we have here the reimbursement of the ransom. And then the third party liability, because as Philippe said, the company is victim of the attack, but unfortunately they are liable toward third party. Third party is the patient and maybe their employee as well, in case hackers have also stolen employees' data. So here it's defense cost and indemnity to third party, so the patient, a defense cost in front of the data protection authority, and GDPR fines and penalties with NIS2 fines and penalties if it's covered. Let's move to the next slide.
Yes, many thanks, Laure. And I think what you showed in your example is quite spectacular in terms of the combination of the different requirements that the entity has to fulfill in order to be compliant. I think that all in all, what the message that we want to really convey through this report is the fact that for the risk managers, very clearly a challenge and opportunity to raise your profile. One of the key elements about the risk managers is the unique opportunity to have the access to a number of different stakeholders. And the major responsibility for the risk managers, first of all, to be able to be familiar with all those different pieces of legislation in coordination with the legal guys and the compliance guys, and to be able to promote internally the role of risk management, how it plays a really an important element in the sustainability of the company. One of the key major mission of the risk manager is to be able to alert, guide, and inform on emerging risks and regulation constraints involving risk management. And probably, and my experience is such that not all the organizations, different stakeholders are familiar with the evolution of those regulations and the compliance requirement that we have to fulfill. And that's really one of the roles for the risk managers, to make sure that they are all fully aware about that. Next slide. And again, we talked about governance because it was clearly one of the key pillars for cyber risk management, and making sure that as risk manager, you are able to break silos. You saw on the previous slides all different stakeholders. They usually don't talk to each other that often. So it's really where the risk manager has a role to play, to be able to develop scenario analysis, bringing the different stakeholders together. I mean business, I mean security, I mean finance, and to be able to have a consensus about major critical scenarios that are credible from a security standpoint, and to be able to have the combination of the technical risk related to cyber, but also the business impact related to this technical risk, and finally confirm that from a financial standpoint with the financial organization. And that's really how you can set this process to make sure that we are all aligned about what is really the exposure for the entity, and to be able to have a coordination of the major strategic elements that are being performed in order to mitigate that exposure. And again, coming back to this report, to be able to have a process in place to comply with this regulation, and to be able to make sure that all the different actors of this process are fully aware and trained for that. Next slide. I talked about trained, and effectively be prepared is a clear element. There is, of course, for the risk measures, a strong connection with the CISO, with the DPO, with legal, is making sure that we have all those different forces fully coordinated in order to respond to our crisis and to the requirement related to this crisis. Crisis management needs to be in place, and it's not that obvious. Who are the contact person? How do you contact them if there is no network at all? And that's where probably there is a clear challenge for the risk managers to be part of the crisis team. And let me be very clear, it's not a given, it's not obvious. To be part of the crisis team, you need to make sure that you add value. And if you don't add value, you will not be invited to the table. And we are all convinced, both FERMA and Willis Tower Watson, that yes, risk managers have a clear role to play, and they can add value. Add value, for example, making sure that as part of the insurance contract mentioned by Laure before, there is an access to external experts provided by the insurer. So to be able to contact those experts to help the organization to sustain and to resist to the attack is a clear added value. Second added value is to make sure that you have a traceability of all the decisions that are being made during the crisis phase, because those decisions will lead to financial impact, and this financial impact will be audited in order to be able to be indemnified, and to make sure that all the decision process is being made and kept, so that we can really argue that all those decisions were made in good sense. That's where the risk manager has really a role to play in this crisis team. So therefore, when we really want to make sure that the companies are able to recover as quickly as possible, is to make sure that the crisis team is as efficient as possible. And one of the things that we would probably recommend for the companies that are insured is to contact their insurer and to discuss with them what would be the first steps to be followed during a crisis, and to do that well in advance in order to make sure that we are prepared and fully coordinated with the insurer about what they can support us for. Next slide.
So here we are going to go through some insurance consideration, but really related not to the case study, but related to the regulations that we describe in the first slides. So we need to really be careful in case you have already a cyber insurance policy in place. We need to be very careful that the definition of event or incident or cyber attack, depends on the insurer or the broker wording, you need to be very careful that it match with the definition of what are the kind of incident that need to be reported under NIS2, DORA, CRA, or the GDPR, the incident that I've described before. So you need to be very careful on that specific topic in order, of course, to beneficiate the maximum from your cyber insurance policy. Then there is also a scrutiny to have in terms of the coverages related to the notification cost. Usually, the notification costs under cyber insurance policy are related to data breach. So we need to extend those notification costs not only to data breach, but to security breach in order to beneficiate from NIS2, DORA, or CRA. Coverage for regulatory proceedings as well. In cyber insurance policy, we have defense cost and coverage for fines and penalties. We need to include the new regulation and not only the fines and penalties that are related to data protection law. Again, this is something that depends from one country to another. There is not a common understanding about it is legal to pay, to reimburse fines and penalties in the different 27 EU member states, unfortunately. And then, as Philippe mentioned early in the webinar, we need to be careful as well on the local or the international regulation that may also apply and that will unfortunately be another stack of regulation. So I will mention the LOPMI. So LOPMI is a French law that introduced cyber in the insurance code in France. And that specific regulation make compulsory for uninsured that suffer an attack through its IT system and that is covered by an insurance contract, not only a cyber insurance contract, an insurance contract. So in case the insured has suffered an attack on its IT system, the victim of the attack must report to the police within 72 hours. So it's a very, very short time frame. And in case, unfortunately, company fail to report within this time frame to the police or to the gendarmerie in France, unfortunately, the insurer will be able to deny to make reimbursement or cover any of the loss suffered by the company. So it is a mandatory article in the insurance law that unfortunately we cannot change contractually. And there is as well, last but not least, a new rule edicted by the SEC in the US. It applies only for listed companies. So there are European companies that are listed in NASDAQ or in the NIS, and they have also to report to the SEC incident that have a material effect. So there is a definition to the SEC in order to inform shareholders about the cyber incident that may impact, of course, the value of the share. So let's move to the next slide.
Yeah, so really, as a conclusion, and I hope that we have been able to convince all of you, and I see that we have a lot of participants to this webinar, and many thanks for that. Clearly, we cannot ignore regulation. So the risk managers are there to prepare and alert the internal organization about that. However, one of the strengths of this report was to be able to draw some recommendation that we will push to European Commission. First of all, the call of the Council to assess the results, because it's good to have a regulation, but it's good to see how efficient are those regulations. What is the feedback they have? How many alerts, how many notifications they have so far addressed, and how those notifications have been able to be efficient in making sure that we avoid systemic kind of risk. And therefore, we really call for a review about that to address maybe the gaps in the EU cyber policy and make sure that there is maybe a revision of the EU cybersecurity strategy overall across the different elements that we have seen so far. The second element is about the reporting stack. Clearly, we need to map all the different requirements. And again, make sure that they remember that we talk about a victim. We talk about an organization which is suffering a cyber attack, which is under stress, with a limited kind of capability for communication, coordination, and therefore we need to secure that the different requirements are being mapped and try really, and one of the ambition of the new administration of EU level is to reduce administrative burden, and the 25% is a goal which is related to all kind of administrative tasks, and we would like to implement this kind of target for this reporting as well. The third element is about the communication complexity. I think that Laure has clearly mentioned the different stakeholders that we have to address under the different regulations. Well, something, again, we really would like to push to have one single point of entry and to develop that one single reporting done by the organization which is suffering this cyber attack is made to one administration, and there is better communication and coordination among the different administrations, either at national level or European level, so that this one single declaration is shared among all different administrations in order to improve efficiency overall. Finally, we need to continue to stimulate cyber risk management, especially for the SMEs. We know that the maturity level of cyber risk management among the large corporates is there. It's both in terms of mitigation, it's both in terms of insurance, and we have seen a number of results in the reduction of the claims, and both in terms of number, but also in terms of severity, and it works very well. However, the lower we go into the organization relating to SMEs, clearly the awareness section needs to continue to improve, and we really need to stimulate cyber risk management among those organizations that are really the majority of the organizations of Europe. And also promote the insurance application. Again, as mentioned, cyber insurance contract is twofold. It's a way to address additional resource for crisis team, to be able to have access to a number of experts, either on the technical side, legal side, communication side, outside of the organization, and helping the entity which is suffering this attack to resist. And the second element is the indemnity. So the lower we are into the organizations in terms of size, they are probably not have all the resources internally to sustain this kind of attack. And therefore, insurance can be a way to promote cyber resilience across the EU economy. Laure, do you want to address some additional conclusions on your side for the next slide?
Yes, if we can move to the next slide. Yeah. So as a wrap-up, really the key question is, are you ready? As Philippe said, there is really a need for collaboration within each company with key internal stakeholders to really be prepared. And when I say be prepared, is really to identify and assess new cyber notification requirements, depending on the activity, of course, of any company, the activity performed by any company. But really, as Philippe said, to make tabletop exercise, or really to be prepared to face notification requirements. There are some, for the GDPR, for instance, in some countries, data protection authorities have put templates in their websites, or for the NIS1 previously in France, for instance, the Cybersecurity National Agency, ANSSI, put also guidelines in terms of how to report, what information to report. So it helps as well to be prepared. And these notification requirements, of course, it's not only the duty of the risk manager, it's a team effort in the company to report internally, of course. We need to also think about employees and everyone in the group that need to be aware, and also externally, as we said, in order to comply with this cybersecurity regulation. When I say internally, I say employee, but we can think about as well about the directors and officers. We have spoken about the big DNO survey that WTW make each year. In case there would be a big cyber incident, directors and officers can see their personal liability engaged because of the cyber incident. So in terms of insurance, that may also be covered under directors and officer liability. But of course, they need to be aware very quickly. And last but not least, make sure, of course, that these coverages are implemented into your cyber insurance program and into your DNO program.
Many thanks, Laure. So as mentioned, so we can welcome questions from the audience. You can type your questions and we will go through that within the remaining time we have. Clearly, this webinar is recorded and will be available to anyone under the FERMA website, as well as the supporting slides, which will be provided as well. One thing, we have one question, Laure, about the DORA regulation, and the question is, I understand that DORA applies to financial sector only, but could there be any requirement towards medical device companies under DORA if they are involved in digital health solution?
So DORA, as I mentioned, is only applicable to the financial sector. So there is a list of financial services that need to comply with DORA. And DORA is lex specialis over NIS2. So if the company is not a company that provides financial services, then the company needs to comply to NIS2.
Okay. There is a question about the definition of what we call a significant impact. So is there a kind of a definition or a threshold of what we call a significant impact?
So the definition is made by the NIS2. It's maybe the person who asked that question. When you will have access to the slides, you can go to slide 11. So there is a strict definition of what is considered as an incident that has a significant impact on the provision of the services. So it's an incident that has caused or is capable of causing severe operational, yes, that one, disruption of the services or financial loss for the entity concerned. Or second, it has affected or is capable of affecting other natural or legal persons by causing considerable material or non-material damages. So in terms of threshold, I do not have the answer while reading NIS2. NIS2 is a directive. So NIS2 needs to be transposed into national law, and all member states can transpose and implement threshold that will only be applicable for their countries. You remember, for a directive, you need to transpose the directive into national law. You cannot be less stricter than the directive, but you can be more stricter than the directive.
Okay, of course, there is the usual questions about insurability of fines and penalties. So question is, what are the countries where it's insurable and what are the countries where it's not insurable?
So I can provide offline, of course, because we made a survey at WTW when GDPR entered in force. We made a report together with with Clyde and Co. about a map of all EU member states, so the 27, with colors. So red, it's not covered, yellow, it's uncertain, and green, yes, it is legally, there is a law that mentioned that it can be covered. So I can share it offline with the person who has asked the question.
Yeah, so if I understand well, for me, the situation is in some countries, it's clearly a no, that's not insurable. But in most of the countries, it's maybe a gray zone where it's not exactly officially permitted, but it's not officially forbidden. So probably we are in this uncertain situation for a number of countries.
Yeah.
There was an interesting question about DNO coverage. I mean, you clearly highlighted, Laure, the consequence and the impact for the C-level in case of non-compliance. And clearly, I think that is something which probably you can expand. What we can say from a risk measure standpoint is there is clearly a link between DNO insurance and cyber insurance. And I have experienced some cases where the DNO underwriter insurers refused to cover as long as there was no cyber insurance in place. Can you expand on that?
Yeah, if we can go back to slide 15, I can go through the criminal sanction, and the criminal sanction is for C-level management. I mentioned at that time, unfortunately, for the directors and officers. So there are three kinds under NIS2, three kinds of sanction. One is ordering that organizations make compliance violation public. So it's unfortunately not good advertising for the group. Making public statements identifying the natural and legal person responsible for the violation and its nature. And then if the organization is an essential entity, temporarily ban an individual from holding management positions in case of repeated violation. So it can go through even the ban of an individual from managing the company.
So yeah, I mean, clearly just one point or one good remark from one auditor that about the captive. So captive are effectively a financial organization and as such are falling into the DORA regulation. So that's something that we need to keep in mind going forward. We have a question regarding LOPME law. This cover for non-French HQ companies or companies purchasing global cyber insurance program. But in this case, the company has a subsidiary operation in France, which is, let's assume, impacted by a global cyber attack and other operations. So in fact, the question is, if I understand well, it's not just about the French organization as such, but also the international organization which have a subsidiary in France, correct?
Yeah, so LOPME is very complex. I agree completely. And when this article entered into force into the insurance code, we had a lot of questions towards insurer. And I remember, Philippe, I asked you that question at Amrae 2 years ago. So now it has been made clear. If your insurance program, so your cyber insurance program in that case, is subject to French law, then the French insurance code apply, and then LOPME apply. If your cyber insurance program is not subject to French law, but another law, and it is your French entity subsidiary that is it will be your cyber insurance policy subject to the law where the headquarters is that will apply. So the LOPME will not apply on that case.
Very clear. And as you rightly mentioned, this is something which we will probably try to improve given the feedback we have all over the place. Maybe one last question, because time is running. In the case the attacked organization does not notify the relevant authorities in due time, what will be the position of the cyber insurers in country in which there is no specific mention to respect in the insurance code like we have in France?
So if I understood properly, the organization failed to comply with, let's say, GDPR. They have a cyber insurance in place. It's not in France. So cyber insurance policy, they do cover the failure from company to notify both supervisory authority, both individuals, again, if there is a risk for their privacy. So it is the classic coverages that we have in cyber insurance policy. We have as well, as I mentioned, the defense cost when the notification will be done at the end, because if the company failed to do so, nevertheless, they will be asked to do it maybe months after. So defense cost in front of the authority is also covered. And the recourse, the claims notification that third party can do to the company in order to ask for indemnity because they have suffered damages due to the failing to receive the notification, it is also covered.
Okay, I think that we achieved the end of this webinar. I hope that this webinar was informative. I really encourage all of you to download the report, which is available. And again, I would like to thank Laure Zicry for participation and your contribution to this work and to alert globally us about the major measures that we need to take in order to address this regulation burden. Many thanks to all of you, and so this webinar will be available very shortly under our FERMA website. Many thanks to all of you.
Thank you very much. Bye.